Hello people, how are you? What's up? I hope you all are doing extremely beautifully amazing. People, today we're going to complete off with the 3 remaining sub-chapters under corporate law for the subject of CMA final corporate and economic laws. After today's lecture, you will be thorough with the corporate law. We have already done with SEBI, corporate governance, IBC. People, after that, 2 more lectures and then you are sorted. No one can stop you from scoring exemption. This is my promise. Okay, people? So, without wasting any time, let's get started with our first sub-chapter. People, remaining chapters are super easy. The most difficult one was, tricky was, accounts and audit. And next is board of directors and KMP. Now we are done with that. Remaining sub-chapters are extremely very easy. Okay, so people, let's get started with our 1.6, that is board meetings and procedures. So people, tell me quickly, what is the frequency of board meetings? First meeting should be held within how many days of incorporation? 30 days of incorporation. We already know this, people. Okay, now how many board meetings should be held in a year? 4 board meetings should be held in a year. Very, very important. In exam, question can be asked. The 3 board meetings have held. 1 board meeting has not been held. What is the contravention? This is the contravention of section 173, subsection 1. Okay. The gap between 2 board meetings should not be more than 120 days. Very easy. Then people, whatever rules we have studied till now, this rule are not applicable to OPC, small dormant company. Even if they meet once in each half year, it is completely fine. The gap should be at least more than 90 days. And it is not needed in case of OPC, because in OPC there is only 1 director, people. Okay, OPC can have multiple directors, but initially OPC only has got 1 director. Committees should meet as often as required. Sir, which committees? Audit committee, NRC committee, other committees. Everyone should meet as often as required. This is written in under Companies Act 2013. Okay. Independent director should hold meeting once in a year. In the last lecture, we have understood this, people, right? Okay. Then people, how is the board meeting conducted? Participation. Directors must attend in person or through video conferencing or other audio visual means also completely fine. Then people, conditions. System must, whatever system in which board meetings are conducted, that system must record and recognize participation along with the date and time. Okay. Central government may put certain restrictions where certain matters cannot be done via video conferencing. Being a very sensitive matters, central government can prescribe additional restrictions. Okay. Now people, these key rules, I just want you to go through this. Notice is important. Notice is, people, notice period is minimum 7 days written notice to all the directors, whether in India or abroad. 7 days notice is important. Okay, notice should be made via hand delivery, post, email or any other electronic means are also completely fine. Shorter notice allowed only for urgent business. People, this rule is very, very important. Listen to me very, very carefully. Board can give a notice at a shorter notice. What is the meaning of this? Rule says 7 days before the board meeting you should give the notice. Yes or no? So over here, board can also give notice for a period less than 7 days. 3 days before the notice can be given, provided at least 1 independent director must be present. And next is, if no independent directors are present, decisions are only valid after independent director gives a approval, gives a thumbs up after meeting has been conducted. Okay, sir, short notice are allowed? Yes, short notice as shorter consent notice allowed, provided it's an urgent business. Number 1, at least 1 independent director should be there. And number 3, if there is no independent director, it should be ratified, it should be made valid by 1 independent director. Okay. In your notice, meeting must be written that meeting is called at a shorter notice. Okay, very easy. Now people, rules is very procedural. In exam, 90% questions will never come with respect to procedures and rules, okay? But still, I want you just go through it. Secretariat standards, also people just go through this. It's extremely easy. Date, time, miscellaneous rules and regulations. I'm not going in detail, people, because this is a fast track batch. So I'm only focusing on important topics. Okay, people? Chalo. If any provision has been violated, penalty is 25,000 rupees on every officer responsible for giving notice who fails to do so. Very easy. This question will again be asked in your exam. Okay. Now people, 174, mark it star, 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 as many stars as possible. It is the most important topic of this sub chapter. Okay, very important. What is the meaning of quorum? Quorum is, people, it's a minimum number of directors that must be present, without which any decision taken will be invalid. Minimum this number of directors should be present. Okay. Without quorum, meeting will be invalid and decisions are void. Now people, very important. Minimum quorum is 1/3 of total strength. If the total strength is 9, 1/3 of 9 is 3 or 2, whichever is higher. Which one is higher, people? 3 or 2, which is higher? 3 is higher. Supposing 12 directors are there. What is the quorum? 1/3. So 4 or 2. What is the quorum, people? Tell me. 4 is the quorum. So minimum 4 directors must be present to make any decision valid. Okay. Audio visual means are also counted for the quorum. If one director is sitting, if 2 directors are sitting in office, a registered office, 1 director is participating through audio visual means, it is completely counted for the quorum. Continuing directors can act only to increase the number of directors to quorum level or general meeting. So people, if the quorum falls below the required number, the continuing directors can never pass any decision in the board meeting because it could be invalid. The decisions that only be passed will be to increase the number of directors to match the quorum level or to call the annual general meeting. For that purpose only, even if the quorum falls below the limit, it is completely fine, provided these 2 decisions can only be taken when there is no quorum. Yes or no, people? Perfect. Now again, this limit is again very important. If 2 or more directors are interested, in a transaction, quorum will be remaining non-interested director, but they should ensure that it is not falling below number 2. Let's say 12 directors are there. So what is 2/3 of 12? 3, 4. So out of 12 directors, 8 directors are interested. 8 directors are interested. So remaining 4 directors, can they participate in the meeting? Yes, they can participate in the meeting, but you have to make sure that no matter what is the number, quorum should not fall below 2. Only when 2/3 or more directors are interested, only in that case this rule will be applicable. Otherwise, this rule will never be applicable. Okay, people? So whenever in exam question is asked with respect to directors who are interested, directors who are not interested, always calculate 2/3 of the total number of directors. If these people are interested, only then if the quorum is 2, it is completely fine. Then there is no 1/3 or 2, whichever is higher rule will not apply. Only when 2/3 or more directors are interested. Right, people? We are going to understand this in practical when we will be solving papers. Okay. Now key terms. Any director directly or indirectly concerned with the contract or arrangement in any agenda is called as interest. We have no, people, we know disclosure of interest, section 184. In the last lecture we understood what is the meaning of interest director. Okay. Now next, for section 8 company, there is a different quorum rule. What is the quorum rule? For section 8 company, quorum must be 8 members or 25%. Over here, whichever is less, rule is there. So 25% or 8 members, whichever is less will be the quorum. Minimum always 2 members are required. Minimum always 2 are required. Let's say 10 directors. 25% of 10 is 4 or 8, whichever is less. That means 4 is the quorum. Okay, this is how you calculate quorum for Section 8 company. Now people, for 1% company, we know quorum is not applicable. Fraction will be counted off to the next round number. Vacant seats are not counted in total strength. We know this. People, this is again important. Quorum must be present throughout the meeting. It should not be a case where director has started the meeting, in between he has left, while the meeting ended he again came back. No. Quorum must be present throughout the meeting. For committee meetings, presence of all members are required unless otherwise stated in the articles of association. Very easy. Okay. Now passing of resolution by circulation. People, again very important, section 175. Okay. So when it is not possible for board to conduct physical meeting, they pass resolution by circulation. Yes or no people? Circulars go to every director's address. He will even vote in favor of the decision or vote in against the decision in that circular itself. Okay, this is called as voting by circulation. Concept: when used when urgent decisions is required and board meeting conducting is not possible, resolutions circulated and approved in writing by majority are deemed to be passed. So for a resolution to be binding, majority of directors should pass the resolution by circulation. Yes or no people? Very easy. Now I will not go to the procedure people, it is very easy. Now on procedure, only 3 to 4 points are important. Number 1 is draft resolution and papers to be sent to all the directors at their registered address. So every single director circular resolution should reach. Okay, mode can be, I'm not going to mode, becomes valid only if majority approve. If majority approve, then only the CR will be valid. CR means circular resolution. Okay, if one third of directors demand discussion, let's say there are 6 directors in total, everyone's home CR has been passed. Okay people, now 1/3 means 2 directors are demanding that no, we want board meeting to be conducted physically, then board meeting has to be conducted. Resolution passed by circulation must be noted in the next board meeting and entered in the minutes. The moment the next board meeting again assemble, they have to note this in the minutes of the books, in the board minutes. Yes or no people? In the minutes of the next board meeting. So people, this is very important. 1/3 of directors demand discussion. It must be decided as like a physical board meeting. In exam, definitely this question will be asked. Okay people, chalo. Next, SS 7 days. Directors get 7 days to respond to circular draft resolution. Certain important matters cannot be passed by circulation. This is again important. Very important. Which matters can never be passed by circulation? So general items. Committee meeting notice, noting the committee meetings, approving financial statements and board report, compliance certificate, appointment of secretary and internal auditors can never be approved by a circular resolution. Now which are the specific items? Borrowing, except debentures, investment, loans, guarantees, political contribution, calls on shares, fixing the remuneration of whole-time director, manager, MD, appointment, removal of KMP, appointment of MD, manager in more than one company, casual vacancy, RPT, not at arm's length price, sale of subsidiary, sale, purchase of major assets, payment to director for loss of office, matters from independent directors meeting, then people, corporate actions, buyback, issue of securities, merger, demerger, diversification, takeover, acquisition. This can never be passed by circular resolution. Then people, for listed companies also, approving annual capital budget, KMP remuneration information, major legal notices, HR issues, foreign exchange, exposure details, regulatory or listing non-compliance issues. All the major important matters where actually board meeting is required, actually discussions are required, without which it would not be reasonable to pass a decision. For those matters, circular resolution can never be passed. Physical board meeting is required. Yes, people? Chalo. Now let's talk about the minutes, people. Minutes are the written record of business transacted, decisions taken, and resolution passed in a meeting. They serve as an official evidence in the proceedings. So if you want to confirm that whether really these resolutions were passed or not, you have to check the minutes. Court will check the minutes. These are called as a legal evidence. Then people, statutory requirements. What is the statutory requirement? Very important. Every meeting must prepare and keep minutes of general meeting, resolution passed by postal ballot, board meetings and committee meetings. What is the time limit? Within 30 days of conclusion meeting, you have to prepare the minutes and it should be signed. Record in books with consecutively numbered pages. Very easy. People, I'm not going towards the procedural aspects. Just remember this, people. Minutes must contain a fair and correct summary of the proceedings. Then all the appointments made during the meeting, directors are appointed, every single thing should be noted down in the minutes. Next is, if any director is dissenting, that should also be noted in the minutes. Then people, chairman's discretion. Chairman has the ultimate power to decide what all items will be included in the minutes, what all items will not be included in the minutes. Then people, it should be signed by the chairman of the meeting or the next meeting. Then properly kept minutes are legal evidence. No unauthorized circulation of meeting proceedings are allowed. You cannot share the proceedings information, you cannot share the minutes. Right, people? Chalo. So company must follow Secretariat standards. SS1 talks about board meeting. SS2 talks about the general meeting. People, inspection, minutes of the general meeting, postal ballot, resolution must be kept at the registered office. May also be allowed in electronic format. Next is, it should be open for inspection by any member during business hours at 1 a.m. Would it be allowed to inspect the books of accounts? No. Company must allow 2 hours per business day for inspection. Then people, members may get copy within 7 days of request. Very easy. Okay. Now, content requirements. Minutes must contain a fair and summary, people. Every single thing is same. Now, people, this is very, very important. What all items you can never include in the minutes? Okay, you have the option to choose whether include this or not. Defamation to any person. If one director is criticizing other director, if one director is defaming other director, then those items, those proceedings, those conversations should not be recorded in the minutes. Next is, people, irrelevant, immaterial, unnecessary details should not be included in the minutes. Next is, any details that is against the interest of the company, it is against the company's reputation, it should not be included in the minutes. Okay, company is completely allowed to that. Then people, circulation and validity. Draft minutes must be circulated within how many days? Within 15 days should be circulated to all the members. Properly kept minutes are called as valid evidence. We already know this. Penalty will be, if you do not follow the rules, company will be penalized 25,000 rupees. Officer in default will be penalized 5,000 rupees. Now, people, very, very important topic, that is registers. In exam, question can definitely be asked. Basic rule. All registers, minutes and records must be kept in electronic format. Okay. Registers must be kept in, people, this may be kept in electronic format. It is not mandatory. Okay. Next is, registers must be kept at registered office for statutory purposes, information purposes and MIS purposes. So basically company has to keep registers at the registered office. Okay. Now the important question is, what all registers are to be maintained at the registered office? Very, very important, people. In exam, question can definitely be asked. Number 1 is, in people, investment not held in company's name. Tell me the section 187. Deposits, securities bought back, charges, members, debenture holders, beneficial owners, foreign register, annual return copies, minute books, postal ballot register, books of accounts, cost records, contract of interest, directors and KMP, loans and investment guarantee, duplicate share certificates, sweat equity shares. People, I would want you to remember at least 7 to 8 registers name. In exam, definitely question can be asked. I want you to at least write 7 registers name. Okay, people. Now let's talk about the audit committee. To which companies audit committee is applicable? So every listed company audit committee is applicable. To every public company also audit committee is applicable. But is it all public companies? No. It is only those public companies with a paid-up capital of 10 CR or more or turnover of 100 CR or more. Only they have to appoint audit committee. Next is outstanding loans and borrowings. If it exceeds 50 CR or even if it touches 50 CR, they have to form audit committee. So three types of companies must be forming audit committee. So audit company is applicable to which companies? Number 1 is listed company. Number 2 is public company having a paid-up capital of 10 CR or more or turnover of 100 CR or more. Outstanding loans, borrowings, deposits are 50 CR or more. To these companies, audit committee is applicable. Okay. Now what is the composition of the audit committee? Minimum 3 directors should be there and majority should be independent director, which is not mandatory for Section 8 company. So audit committee majority should be independent director. Majority including chairperson must be able to read, understand and interpret the financial statements. If they are sitting at a audit committee's position, obviously they should be well versed with the finance, right? Next is composition of the audit committee. Who all are the members of the audit committee? What is their expertise, skill, qualification? Every single thing should be mentioned in the board's report. Yes or no, people? Very easy. Now what are the functions and powers? The job is to recommend appointment, remuneration and terms of the auditor. Now they will also review and monitor the performance of the auditor. Next is they will examine the financial statements and board report, audit report. Next is they will approve or modify RPT. Remember people, omnibus approval, can give omnibus approval C. Scrutinize intercorporate loans and investment. They will also examine the intercorporate loans and advances. Conduct valuation of assets or undertakings. Next is evaluate the internal controls and risk management systems. Monitor the end use of public issue funds. So audit committee will make sure that stories like Rajaratnam and Rajat Gupta should not be repeated. Yes or no, people? Very easy. So people, I would want you to at least remember 5 functions of the audit committee. Very, very important. Next, authority. What are the powers of the audit committee? They can investigate any matter with respect to the above items. Next is they can also seek expert professional advice and they have got full access to the company's records. Now what is the role of the auditor? Committee can call for auditors' comments on internal controls, auditor scope and financial statements review. So committee can call for auditors. That means auditor is answerable to the committee on the following matters. So auditors and KMPs have a right to attend and to be heard in the audit committee, but they cannot vote in the audit committee. So in audit committee, KMPs and auditors can participate, but they can never vote. Okay, very easy. Now, disclosure, composition. Now people, board report must mention the composition of the audit committee. We know this. Reasons if board disagrees with its recommendation. So if audit committee is recommending an auditor and board disapproves the recommendation, board has to disclose the reasons why they have disapproved the audit committee's recommendation, so that every single thing should be transparent. Right people? Chalo. Next is vigil mechanism committee, people. To prevent stories like Rajat Gupta, Rajaratnam, insider trading happening, For that purpose only, vigil mechanism has been introduced, so that employees should go and report any fraud happening inside the company, and they will be prevented from victimization. Company will safeguard them. Yes or no? Mandatory for which companies? All listed companies, all the companies that is accepting the public deposit, there is no limit. Number two is have borrowings more than 50 CR from banks and financial institutions. Is there paid up capital involved? Is there turnover involved? No. Only borrowings and public deposits are included for calculating this limit. Okay, people? Chalo. Now, what is the purpose of this vigil mechanism committee? To allow directors and employees to report genuine concerns, must ensure protection against victimization. The moment you report the fraud, you should never be removed from the company. This is the purpose of vigil mechanism committee. Then provide direct access to audit committee's chairperson or nominated director. So the vigil mechanism ensures that every employee can directly report fraud to the chairperson of the audit committee. Right, people? So details must be disclosed in the company's website and board report. What is the composition of the vigil mechanism committee? Right, people? Now, what are their roles? Audit committee will supervise vigil mechanism committee. So audit committee, vigil mechanism committee. Member with conflict must recuse. The moment I am an employee, I have reported fraud carried out by Rajat Gupta. That means what? If Rajat Gupta is a part of vigil mechanism committee, he should be excluded from participating in the meeting that is against him. Yes or no, people? Frivolous, false complaints committee can take disciplinary action. Very easy. Now comes duties and liabilities of director. Can you tell me a section, people? Section is 166. So we all know that board acts on behalf of the company. Section 179, powers of the board. Restriction on the board is section 180. Directors must act in their best interest with the act, memorandum and articles. They are trustees and agents of the company. We already know this, people. Nothing rocket in size. Duties of director. They should act as per the articles and the Companies Act. They must act in good faith for company, employees, shareholders, community, environment. They must use due care, skill and diligence and independent judgment while forming opinions and giving decisions, avoiding conflict of interest, not seek undue personal gain. Just because I am a director in a company, I should not use it for my advantage. Next is, I cannot assign my office. What is the meaning of this? I cannot ask you to sit in my position as a director. No. So what is the liability of directors? So if an outsider has suffered a loss because of the director will be personally liable if the act was ultra vires. Number two, enters contract in his personal name, issues false prospectus or commit fraud or regular or irregular share allotment involving fraudulent trading, personally liable for debts. So he will be personally liable for all these items. Now if company has suffered the loss to the company for negligence, ultra vires act, illegal acts, a breach of trust, so company can make him liable under these acts. Next, people, to shareholders, on what basis he can be held liable? For breach of trust or negligence. Shareholders have trusted the director and he has acted against the shareholders' interest, so he will be held liable. Next, people, for statutory defaults, in case if he has, for example, let's say 184, section 184, he has to disclose, right? So he has not disclosed. It's a statutory default, people. If the company has not filed the financial statement for 3 consecutive financial year, he will be disqualified. Yes or no, people? Chalo. So we are done with the subchapter of board meetings and procedure. Now let's look at the expected question, people. Number 1. The board of Trident Industries Limited calls an urgent meeting of 24-hour notice to approve an emergency investment decisions. The company has 2 independent directors, but neither of them could attend the meeting. The remaining directors went ahead and passed the resolution. Now you tell me people, is it valid? It is not valid, but it can be valid if later it is approved or if later it is ratified by the independent director. So this you have to write. Next is people, video conferencing and participation and quorum. Nova Tech Limited, I will change the color. Nova Tech Limited scheduled a board meeting with 12 directors. 3 directors joined through video conferencing, 1 attended in person, and 2 were abroad but uncontactable. During the meeting, a technical issue disconnected 1 director midway. Whether the quorum requirement was satisfied. What is the quorum rule, people? 1/3 or 2, whichever is higher. So 1/3 of 12 is 4 or 2, whichever is higher. So 4 directors must be present in the meeting. So 3 directors joined through VC, 1 attended in person, and 2 were abroad. Okay, so 4 directors have attended the meeting. During the meeting, a technical issue disconnected 1 online at a midway. Now people, you tell me quorum should be present only during the start and the end, or it should be present throughout the meeting? It should be present throughout the meeting. Hence it is quorum must be present throughout the meeting. If connection is lost, meeting must be adjourned and again it should be reconvened. Very easy people, extremely easy. Quorum rule is 1/3 or 2, whichever is higher. Okay, if 2/3 directors are interested, then only quorum can be 2. It is completely allowed. Now people, the MD of Galaxy Motors Limited circulates a draft resolution seeking directors' approval to appoint a new internal auditor through email without meeting. Now you tell me people, can we appoint internal auditor, secretary auditor via circular resolution? No, it is not allowed. So it is a violation of section 175. Resolution is invalid. I am re-recording this question solving again because some audio issues occurred during the lecture. So let's get started with our next question, that is case study number 4. So people, let's read this question properly. The board of Silver Line Chemicals Limited, how many directors are there? Total number of directors are 9. So total number of director is 9. Okay. Met to approve a supply contract with a partnership firm in which 5 directors are partners. So how many interested people are there? Interested directors are 5. Okay. The remaining 4 attend in the meeting and approve the contract. So remaining were 4. Okay. Was the quorum valid and was the approval legally sound? Now people, we know the moment directors are interested, they should not vote or participate in the meeting. Yes or no people? So now let's see if the remaining directors constitute a valid quorum or not. We know the provision 1/3 of 9 or 2, whichever is higher. Yes or no people? So 1/3 of 9 is equal to 3 or 2. So quorum should be people minimum 3 directors should be present in the meeting. This is the quorum. But how many directors are present in the meeting? Non-interest director number is 4. So can we say quorum is valid people? The answer is yes. Okay. Let's read this. 2/3 or more directors are interested in any manner. Quorum is equal to number of remaining disinterested directors, but not less than 2. We know this people. Interested director defined as one directly or indirectly concerned in the contract arrangement, like those partners. 184, you have to disclose the interest before your participation. So since interest director is equal to 5, less than 2/3 exception does not apply. So people, when is that relaxation given where you are not supposed to follow this? When interested directors are more than 2/3, then only this relaxation will be given. So people, we already know that 4 directors are there, quorum is validly constituted, so this provision will not even be relevant. Okay. So normal quorum is 3, 4 is present, quorum is satisfied. Interested directors should have disclosed their interest and they should have abstained themselves from voting. They should not have voted in the meeting. So resolution passed by 4 non-interest directors are completely valid and enforceable if disclosure omitted in transaction is voidable at the option of the company. Very easy, people. So again, people tell me what is the provision for the quorum? 1/3 of total directors or 2, whichever is higher. Yes or no, people? Now this relaxation can be given if interested directors are more than 2/3 of the total directors, then the relaxation of quorum can be given. You will not have to comply with the provision of the 1/3 or 2 rule, provided at least 2/3 of directors should be interested. But in this case, people, are 2/3 of directors interest, people? No. So that relaxation provision will not be applicable. So quorum, normal quorum provision will be applicable. So that's it, people. So now you will be redirected to the next question. Next question, people. Applicability of audit committee. To which companies audit committee is applicable? Paid up capital should be 8 CR, turnover is 120 CR, borrowings from banks is 45 CR. Now you tell me, people, what is the applicability? The moment it has touched the threshold of 120 CR, it is applicable. Audit committee is applicable. Now next is improper composition. Zenith components constitute an audit committee of 3 directors, 2 of whom are executive directors. 2 of whom are executive directors. Okay. Whether committee's composition valid. People, you tell me, audit committee majority should be independent, yes or no? Are majority independent? No. Hence it is invalid. Next is vigil mechanism committee. Tell me, people, what is the applicability of vigil mechanism committee? Public deposits and outstanding loans and borrowings 50 CR or more. So company, public company borrowings is 60 CR. They have to form vigil mechanism committee. So we are done with this. Now let's look at the past year's paper, people. Past year's paper. People, I will just make small correction over here. I have to change this, okay? Where is this? Where is this? Yes. Okay. Now let's look at the past year's paper. Yes, people, see. Board of Directors of PQR Limited met thrice in the year 2022 and 4th meeting, though called but not be held for want of quorum. Examine with reference to the relevant provision companies whether the provision has been contravened. Obviously, yes, 4th board meeting should be conducted in a financial year. Yes or no, people? Very easy. That's it, people. 7 marks question. Easy question. Next. What is the quorum of company's board meeting in the following cases? A public company has got 10 directors, including 4 non-executive directors, but 8 directors attend the board meeting. What is the quorum for these people? Tell me. Quorum will be 1/3 or 2, whichever is higher. So 1/3 of 10 is something 3.33. So quorum should be 4 directors must be present. So public company has 10 directors, but 8 directors attend the board meeting. So it is completely valid. No problem. Next, Startup Odisha is a section company which has 8 non-executive director and 3 attend the meeting. Now what is the quorum for section company, people? 8 into 25%. That is how much? 8 divided by 4. It is 2. Is a section company which has 8 non-executive director and 3 attend the meeting. That means quorum is again satisfied over here. BOD of X Limited consists of 9 executive directors and 3 non-executive directors. Okay, 9 plus 3 is 12. Total 6 executive directors and 3 non-executive directors attend the board meeting. A meeting was transacted in which one director was interested in. Articles of association fix the quorum for 5. Okay. So articles have fixed the quorum as 5. Total 6 executive directors and 3 non-executive attend the board meeting. A business was transacted in which one was interested. So 6 plus 3 is 7. 6 plus 3 is 6 plus 3 is 9. Among that, 1 was interested, so 8 directors attended. A business was transacted in which 1 was interested. Articles of fix the quorum, so it is 5. It is completely valid. People, just 1 second, 1 second, 1 second. Consists of 9 executive and 3. Total 6 directors and 3 attended the board meeting. Yes, completely valid. Okay. That's it, people. Are you finding the question easy, people? Chalo. Next question, next question, next question. People, over here, there's one more important aspect I want to tell you. See, people, look at over here. Paid capital 10 CR, turnover 100 CR, outstanding loans and borrowing 50 CR. They have to appoint at least 2 independent directors. So people, now look at this question. Just want to add these people to the last lecture. One thing we forgot. 40 CR, paid capital is 10 CR. So they have to appoint at least 2 independent directors. Turnover is 350 CR, that is more than 100 CR. It is more than 10 CR. They have to appoint at least 2 independent directors. It is a public limited company. Okay. So in this attempt, there was no question asked from this subchapter. No problem, no problem, no problem. Now let's talk about this one. June 25. June 25. What is the required quorum for holding a board meeting as per the provisions of the Companies that examine the following cases in this context? In a board meeting, only 3 directors were present out of total 11 directors. So 1/3 of 11. What is this, people? 1/3 of 11. It is 3.6. That means 4 directors must be present. This is the quorum. Okay. None of the 3 directors was interested in any of the items. Examine the validity of the meeting. So people, you tell me, is it valid, people? No. Quorum is 4. It is not valid. Next is, in a meeting of board, out of total 11 directors, 5 directors were present. So quorum is 4, we know. Five directors were present. That means quorum is matched. Out of which 2 directors were not interested in, only 2 directors were not interested in any other transaction. That means what, people? That means if 2/3 into 11. What is the 2/3 of 11? So 8 directors. 2/3 of 11. If 8 directors are interested, in that case, it's completely fine even if 2 directors are holding the meeting, of which only 2 directors were not interested in any one transaction. So people, 5 were present, of which 2 were not interested, which means what? 3 are interested. To make the rule 2/3 valid, we require 8 directors should be interested. How should the meeting deal with the matter? Quorum is completely void, people. Company cannot transact the meeting. Yes or no, people? Perfect. Chalo. Now let's come at next question, next question, next question. People read this question. Next. Again, very, very important. New Horizon is a company with a paid capital of 50 CR, turnover for 340 CR. Uttam Kumar, who is the promoter and MD of the company, wants to run the company complying with all the rules and regulation. Paid capital 50 CR, turnover 340 CR. Two IDs are required. The chairperson is a non-executive and is an eminent academician. He is not independent director. There are two more directors. One is in finance, Verma Commercial, Raman Kumar, who is related to promoter. The company is in the process of taking substantial loan for capital investment from SBI. The same question is repeated. See, is the present board properly constituted? We have already covered this question, people. NHS is an unlisted company with 4 directors. The present board is properly constituted. Is it right or not? We already know, people, there should be 2 independent directors. Yes or no? Mr. Verma, Mr. Raman Kurma, who is related to promoter, he cannot be an independent director because he is related to promoter. Next is turnover has crossed 300 CR. Woman director is required. This should be our answer. So see, people, same question is repeated again. Next, can Raman Kumar be considered as an independent director? No, because he is related to the, who is Raman Kumar? Wait 1 second. Raman Kumar, he is related to promoter. So he cannot become an independent director, people. Is there a need for woman director? Yes. What will the status of the director nominated by SBI? Can she be treated as woman director? Of course, answer is yes. Okay. In case of private limited company, as per the Companies Act, the criteria for appointment of internal auditors. People, section 138, internal auditor. Remember, people, deposit, paid capital, loans and borrowings, turnover. Turnover should be 200 CR or more. Again, people, this is also valid. So 2 and 3 is valid. Next. Are we missing any other question? Let's see. That's it, people. We are done with the board of directors and KMP. Also, we are done, and board meeting and procedure also we are done. Now, people, let's take 5 minutes break and let's resume with our next 2 sub chapters. These are very, very simple. Quickly, we'll wrap it off. Okay? Chalo. Yes, people. Hello, everybody. Welcome back. Welcome back. Welcome back. Chalo, people. Let's get started with our next subchapter, that is compromise, merger, amalgamation. Very small, sweet, quick chapter. Okay, people. Chalo. Let's get started. Yes, people. People, under compromise, arrangement, and amalgamation, what all topics are we going to cover? Very, very small, simple topics. Okay, quickly we'll in 20 minutes we'll wrap it off. Compromise, arrangement, amalgamation. We're going to understand the meaning of first the terms of compromise, arrangement, amalgamation. Then we're going to understand who can apply under section 230 for compromise, amalgamation, and arrangement. Then what are the powers of tribunal to enforce compromise, arrangement? Then people, merger, amalgamation of companies under section 232. We're going to understand. People, I'm 100% sure that you still don't know the difference between compromise, arrangement. Don't worry. I'm going to resolve your doubt. Okay? Chalo. Then people, simplified merger quick process. Section 233. Okay? Effect of registration of scheme, we're going to understand. Then people, how will the shares of the minority be purchased by the majority? And then last is, if central government orders amalgamation in public interest, then how is the effect? We are going to understand. Okay? Chalo. Without wasting any time, let's get started. So people, first things first. What is the meaning of compromise? What is the meaning of arrangement? What is the meaning of amalgamation? People, to resolve a dispute without going to court is called as a compromise. Example is, company and debenture holders agree to reduce the interest rate to settle the dues. Supposing if I am supposed to pay to my creditors 10 CR, that person, instead of going to court, we both enter into arrangement that right now I'll give you 9 CR, but just give me 3 weeks time or 3 years time, I will repay you the remaining 1 CR along with the interest. So this is called as compromise. Yes or no? So settlement of a dispute between the company and members or creditors by mutual agreement is called as a compromise. Okay. Now what is the meaning of arrangement, people? Arrangement means, people, when company restructures its capital is called as arrangement. For example, merger, amalgamation, acquisition, demerger, these are all called as an arrangement, a sort of an arrangement. Conversion of preference shares into equity shares is also called as arrangement. So reorganization of company's share capital or structure of the company, that is called as arrangement. Very easy. Amalgamation means merger or blending of two companies so that they can have a competitive advantage. Yes or no, people? Very easy. Now let's understand who can apply to NCLT for compromise arrangement. Before that, I'm going to tell you a small story. I'm going to tell you one small story. Yes, people. Now I'm going to walk you through a roadmap of how a company undergoes compromise, arrangement, or amalgamation, so that we don't get confused as to who all going to apply to tribunal, what all application required to be filed, who will give approval, when will he give approval. Every single thing, type of confusion will be sorted. So people, number 1, when does a problem starts? I will import this. Yes, people. So when does a company gets motivated to enter into a compromise arrangement? Let's understand. Number one, when a company is in a financial trouble or wants to reorganize its business, it can make a plan or a scheme with its creditors and stakeholders. Example is Skyline Textiles can't pay its loans, so it decides to make a plan with the banks to extend the repayment tenure. Okay, this is called as a compromise. Who can apply to NCLT? Application can be made by the company, creditors, members, or the liquidator that we want to enter into a compromise. Okay. Next. Now NCLT will review the petition. NCLT will review the petition. He will examine your requirements. Exactly what is your situation. He will understand your background. Are you doing it for fraudulent purpose? Every single thing will be examined by the NCLT. NCLT first checks if the proposal looks genuine or not. If yes, it will order a meeting of creditors or members to discuss the plan. So who has the power to order the meeting of creditors and plans, creditors and members? NCLT has the power to order meeting of creditors or members. Okay. Next is, now that the tribunal has ordered a meeting, company will start to prepare the documents. Number one, company, before the meeting of the shareholders or creditors, company must give latest financials, audit report, details of the share capital changes, if it's a debt restructuring plan, if it's a request to increase the tenure of the debt repayment, at least 75% of consent of the secured creditors are required. Plus, they have to confirm that company has got enough assets to pay off their liabilities. They have got liquidity. Then people, now that members have been sent the documents, now members will be receiving notice of the meeting. Company sends notice to all creditors, members, debenture holders, uploads on company's website, publishes in newspaper, sends to SEBI and stock exchange if it is listed. So number one, company faces a problem. Number two, company files a petition to tribunal. Tribunal orders a meeting. After tribunal orders a meeting, company sends the documents to the members or creditors. After sending documents, company sends notice of the meeting. Notice must show the complete plan details, the valuation report. Next is effect of the scheme on the promoters, KMP, directors. Are they earning secret profit or not? Shareholding details now plus last 6 months, and then copy of scheme and other documents for inspection. Every single thing will be sent to members. Okay. Then you are going to inform the regulators if you are listed on stock exchange, SEBI, ROC, central government, RBI, SEBI, IT department, CCI, if it is coming under purview of Competition Commission of India, official liquidator. Then now, if nobody has got any objection, now you will order a meeting. Creditors and members discuss and vote. Scheme is only valid if majority in number, 3/4 in value, vote in favor. 3/4 is required. Example, if there is 100 crores debt, creditors holding 80 crores agree, and then only scheme passes. Then people, who can object in the meeting that no, this is against fairness principle. Members holding at least 10% of shares, creditors holding at least 5% of total debt, only they can file an objection. If I am holding just 1% debt, 3% debt, 9% debt, I don't have any say in the matter. But it is again in the hands of tribunal. Discretion is on the hands of tribunal. Tribunal can decide whether to accept or not. Fast track option. If 90% creditors approve by value, NCLT may skip the meeting of creditors. If creditors are saying, 90% creditors saying that yes, we approve this plan, we don't have any problem, then meeting of creditors is not required. Then NCLT will give a final order. If everything looks fair, after approval, NCLT order must be filed with the ROC within 30 days, and then all the following things must be taking place, and then compromise arrangement is done. This is how the process take place, people. Yes or no? Now let's come to the sub chapter. So who can apply to NCLT? We know company, creditors, members, liquidator can apply to NCLT. Meeting can be done between the creditors, class of creditors, or members or class of members. Okay. Now next, what is the role of the tribunal? Tribunal may order a meeting of the concerned creditors or members as it directs. If tribunal thinks that no, for this purpose meeting is required, he will order a meeting of creditors or members. Now application must include to NCLT material facts, details of share capital reduction if any. If it is CDR, at least 75% secure creditors must consent to this. Okay people. Then people, creditors, responsibility statement, protection, safeguards for others, auditors, liquidity report. All these annexures should be attached along with the application to NCLT while you are asking for arrangement or compromise. Now, the NCLT requires you to conduct a meeting. You will send notice to all the creditors and debenture holders of the full details of the scheme, valuation report, effect on all the people who will have any advantage if any. You will also upload on company's website, listed company, newspaper ad. Okay people, I want you to not to focus on the procedural aspect. Procedural questions are very rarely asked in the exam. Only with respect to limits questions are asked. 10% for members, 5% for creditors. These type of limits will be checked in your exam. Okay. Now people, next is procedural aspect. I'm not focusing on people. Just read this. Now, this is important. No meeting is required if creditors by value of 90% approve via affidavit that no, we don't have to attend the meeting. We are completely fine even if you carry forward without the meeting. Takeover offer can be a part of a compromise. Remember people, takeover. So members holding 70% shares must apply for remaining shares. Listed company takeover as per SEBI regulations. Okay. Now comes people, very important. 231. Now that you have given application to tribunal, now what will tribunal may give an order? Tribunal has supervision power. He will supervise every single thing in detail. Tribunal can also modify if it wants to. Failure of scheme. If you failed to implement the scheme properly, otherwise you will be bankrupt. Tribunal will ask you to wind up. Fourth is reporting. NCLT may seek liquidator or company report on the scheme performance. So 4 types of power tribunal can enforce compromise arrangement. Number 1 is supervision power. Number 2 is modification power. Number 3 is failure of the scheme. And number 4 is reporting of the scheme. Very easy people. Next is merger and amalgamation of companies. People just read this. It's a very procedural aspects. This is very important people. Section 233. Very important. I think definitely question from this topic will be asked in your exam 100%. So people, earlier rules said that you can fast track, you can do a fast track merger, you can simplify the processor, you can simplify the procedure, you can multiply speed by, you can speed up the process. Now, is it applicable to all the companies? No. It was only applicable to certain type of companies. Which are those? Number 1 is 2 or more small companies. What is meaning of small company people? Whose paid up capital is less than 4 CR, turnover is less than 40 CR. These are called as small companies. So holding and wholly owned subsidiary company can also do merger via fast track process under section 233. Next is for startups also it is completely allowed. Startups, one startup with another startup, one startup and small company also completely allowed. It's a fast track merger. Now in 24 there's a new amendment added. Very important. Earlier 2 small companies holding wholly owned are allowed. Now over here this is a new amendment. Holding and partly owned subsidiary are also allowed. 2 subsidiaries in the same holding are also allowed. Walmart owns A, B. So A and company can also merge by fast track merger. Then people, 2 unlisted companies can also merge, but there is a again limit to it. Let's look at the limit. We know small company limit. Limits for listed companies. Total borrowings. When two or more listed companies want to use fast track route, they can do so only if they meet these conditions. Which are the condition, people? Number one is total borrowings, secured plus unsecured, shall not exceed 250 crore. Only then you can apply through fast track merger. Next is combined turnover of merging companies should not exceed 1000 crore. Default in repayment of loans or deposits is not permitted. So two conditions will be satisfied. Number one is total borrowing should be up to 250 crore and combined turnover of merging companies should not increase by should not be more than 1000 crores. Very, very important, people. In exam definitely question will be asked. Okay, chalo. Next is other important conditions. Approval threshold. 90% in value of members and creditors must approve the scheme if it's a section 233 fast track merger. Otherwise it is 75%. Remember, if it was normal it is 75%. If it is fast track it is 90%. Pending investigation, no pending investigation. Type of companies, private, unlisted, foreign company involvement, not allowed. If it's a cross border merger, it is not allowed under fast track section 233. Okay. Now people, now we are going to understand, now that NCLT has approved the scheme, not what will be the effect of the scheme. 1, 2, 3, 4, 5. 5 effects. Number one is all property and liabilities of the transferor will now go to transferee. Assets, debts, contract shift to the transferee. Next is existing charges will continue to be transferred. Then pending legal proceedings will continue to transfer. Then liability of the dissenting shareholders and creditors. So unpaid buyout amount becomes transferee's liability. Now every single thing, all the liabilities will be taken care by the transferee company. Transferee cannot hold its own shares directly or indirectly. Such shares shall be cancelled or extinguished. Shares held by A Limited and B Limited are cancelled and cancelled post merger. Very, very easy, people. Extremely easy. Now let's come to merger or amalgamation with foreign company. It is section 234, cross border merger. So obviously, people, prior approval of RBI is definitely required. Always remember, whenever a foreign company is involved, RBI approval is required. Right, people? Only with companies incorporated in countries notified by central government is allowed. Will a company incorporated in Pakistan and Indian can merge? No. Mode of consideration. If HUL has acquired GSK, what could be the mode of consideration? Cash, depository receipts, and partly cash, partly depository receipts. Do you know the meaning of depository receipts, people? Let's say I have a Kit Kat chocolate, Indian company. I want this chocolate to be sold in foreign country. Now, will people pay me Indian rupees? No. So I will change the wrapper and then I will make it sellable in a foreign country. That is called as depository receipts. If I am converting Indian shares into foreign shares and then selling them, it is called as depository receipts. There are two types of DRs. Global depositories that can be traded throughout the world, and then American depository receipt that can only be applicable to America. Very easy. Chalo. Now purchase of minority shareholders. Very, very important. Provides an exit route for minority or dissenting shareholders during merger arrangement. If certain type of shareholders are not willing to accept the merger arrangement, they have to be given opportunity to sell their shares. Yes or no, people? If a scheme has been approved by majority, includes an exit route offered by the NCLT, then these people should be given opportunity to sell their shares if NCLT has told you. Now value will be as agreed by the registered valuer. Okay. Timeline. Company must verify minority shareholder details within 2 weeks of receiving share consideration. If GSK, majority, minority, if GSK's major shareholder have decided to sell the entire company shares to HUL, in that case, whatever money they will receive, after that, within 2 weeks, they have to make sure that verify minority shareholder details within 2 weeks. Okay. Example is after a merger approval, 98% accept, remaining 2% are offered 300 rupees per share to exit. Very easy. This is called as exit opportunity. Next is very important again, people. Definitely question will be asked. Amalgamation by CG, public interest, in the section 237. When is this applicable? When central government believes that merger is important in case of public interest. In case of Satyam fraud, okay, Satyam fraud, it is not reasonable to shut down the company because 10,000 employees were involved. So in that case, it was sold to Tech Mahindra. Yes or no? So this is called as amalgamation by central government in public interest. Government may order merger by notification in the official gazette, creates a new company with defined property, powers and liabilities. If dissatisfied with the compensation, it can apply to NCLT within how many days? 30 days. Example is government merges two state-run insurance companies to improve efficiency. Small shareholder will get compensated for reduced share value. Very easy. So we are done with the merger, amalgamation, compromise sub-chapter. Now people, let's look at the expected questions. Okay. So there are 3 questions, okay? Quickly we'll solve. Zenith faces liquidity problems and proposes a compromise with its secured creditors to restructure the repayment. Application is made to NCLT under section 230. State who can apply to NCLT for compromise arrangement, what documents must be accompanying the application and how the tribunal proceeds under section 230. So over here you have to mention every single thing. Application can be made by company, creditors, members, liquidator. Application must contain material facts, valuation report, details of the share capital reduction if any. Tribunal orders meeting of concerned creditors and members, and last is notice to regulator within 30 days. And then application is proper if filed with full disclosure, NCLT will direct meetings, and if statutory majority supports, sanction the scheme. Sanctioned scheme becomes binding on the company, directors and company creditors and members. Yes people, so simple step we understood. Okay, now this is important people, very important. Harmony and Rivera propose an amalgamation. 78% of creditors in value approve the scheme. However, few dissenting shareholders allege lack of disclosure of notice. Discuss the procedure, validity of the meeting and explain who may object. Now people tell me who may object. Only members with at least 10% of shareholding or creditors having at least 5% debt can object. Scheme is valid if 3/4 of the members in value of creditors or members will approve this. Notice requirements we know, effect of the notice. Then people, objections valid only if thresholds met. Approval by 3/4 majority makes scheme binding one NCLT sanctioned. If notice is defective, NCLT may direct recirculation or refuse sanction. If you have acted unfairly against any member, if NCLT will deem fit, it will make the complete arrangement as void and they will again ask you to restart the entire process. Very easy people. Perfect. Now merger with foreign company. Bright Motors, an Indian company, wishes to merge with Autotech Pte Limited Singapore. RBI approval has been sought and all procedures under section 234 are underway. One Indian creditor claims such foreign merger is illegal and contrary to the Companies Act. So you tell me people, if FEMA compliance, RBI compliance has been followed, it is completely valid. Okay. Now people, let's look at past year's question paper. Let's look at past year's question paper. In next half an hour, we'll be done with this entire 3 sub-chapters. Okay people, chalo. In a scheme of reconstruction by a MNC listed in India, the company wanted the minority shareholders to get out of the company by selling their shares back to the promoters at a price determined by the promoters. Very, very important. Price is determined by the promoters. No valuer is involved. The minority shareholders were not given a choice whether they wanted to tender their shares or not. In the meeting, there were 6 non-promoter shareholders who voted against the scheme, but chairman declared the motion was carried out. People, however, minority shareholders contend that they had right to reject the offer. Will they succeed? Obviously, they will succeed, because if you have been treated in an unfair manner, you will get resolution. Always remember this, people. Always. Over here, how can valuation be arrived by the promoter? Not allowed, people. Yes or no? So this should be answer, people. Very easy. That's it, people. Let's look at the next question. People, over here, no question was asked from this sub chapter. Okay, cool, no problem. Let's come to this question. December 24. Discuss the amalgamation by central government on public interest as per the provisions of the Companies Act 2013. See, people, for 7 marks it is asked, so you simply have to write the table. Okay, that's it, you are done. People, over here, no question was asked from this subchapter, so we are done. Okay. Now, people, let's start our next subchapter, operation mismanagement. If we are done with this, just go through my notes, just go through my mind maps, and you will be sorted, people. You will be sorted. Okay. Chalo. Without wasting any time, let's get started. Okay. So, people, prevention of operation mismanagement. Beautiful subchapter. Beautiful. Only limits you have to learn, then you are done. Okay. Chalo. First of all, let's understand the meaning of operation. What is the meaning of operation? If there is any unfair or harsh or wrong treatment of minority shareholders, by whom? By majority shareholders, those who are in control. Example is, if majority shareholders deny dividends to the minority, or majority shareholders are removing minority from decisions, it is called as operation. Basically, if minority shareholders are being treated in an unfair manner, it is called as operation. Okay, people. Now let's come to the meaning of mismanagement. The word itself says, people, you are not managing the company properly. Example is, directors misusing the company's funds is called as mismanagement. So, careless, dishonest, improper handling of company's affairs, causing loss or harm to the members is called as mismanagement. What is the meaning of operation? Unfair or harsh treatment. Mismanagement is careless, dishonest, improper handling of the company's affairs. Okay. Now, what does the rule says, people? General rule says is that if a company decisions are taken by majority votes, this ensures smooth management. Obviously, people, everywhere majority vote only sustains. BOD manages daily affairs but works with the Companies Act and Articles of Association. Okay. Now, minorities. Sometimes majority may harm minority shareholders. Law protects them from operation or mismanagement by allowing them to appeal under NCLT. So, people, general rules that every decision will be taken by the majority. But does that mean that every single decision that they take is always in favor of minority? No. when minority shareholders' rights are affected, for them only this section has been made for a resolution. Okay, people? To maintain the balance between majority control and minority rights. Okay, this ensures fairness, justice, equality. Now, rule says that majority will always prevail. 1 second, I'll just stand. General rule says that people, majority will always prevail. Yes or no? A member's voting right is a property right. Shareholders can vote as they wish. We all know that it is always binding on the minority, but certain matters will require SR. The reason why SR concept is made is because if your decisions are going to affect the minority, then SR is required. Yes or no, people? So instead of 51%, 75% is required. Yes or no? So more shareholders will be included in this case scenario. Yes or no? Okay. Now this is the most important topic. From here, every single thing is very, very important. Principle of non-interference. What is that? Always remember, whatever decisions are taken by the majority, it will always be valid. Minority cannot go to again and again complain to the government and this action is wrong, this action is wrong. Always majority will prevail. Tomorrow, if I'm just buying one share of lands and then I criticize, if I have been given the power to raise my voice against Mukesh Ambani, do you think it makes sense? No. So always majority will prevail. Courts generally do not interfere in the general management of the internal management of the company. Foss versus Harbottle. Very, very important case law. Remember this name. If a wrong is done to the company, only the company can sue, not the members. Okay. Rational is the will of the majority always prevails. The company is a separate person and only it can seek legal redress. The company, not shareholder, is a proper plaintiff. The moment any question is asked with respect to Foss versus Harbottle or prevention of operation mismanagement, first thing you have to write is this statement. Very, very important. This and this statement. Two of the most important statements. After that, you have to write this. Then only you have to start writing answer, people. Always remember, introduction, then only you should start writing the provisions. Okay. Now, what are the exceptions where majority will never prevail? Number one, it is ultra vires. A textile company invests in real estate, which is not a part of its object clause only. It's an ultra vires act. Yes or no, minority can object. Next is fraud on the minority. Majority diverts companies' contracts to their own firm for profit. Again, it's a fraud on minority. Over here, they can object. Wrongdoers are in control. When those committing the wrong control the company, so it cannot sue itself. What is the meaning of this? Directors in control committed fraud, minority can sue. Next is people, improper passing of resolution. When an act requires 3/4 of the majority, you just used 51%, is completely void, people, baseless. Then violation of personal rights. When a shareholder's personal right has been violated, he has not been given notice, it is violation of personal right. Yes or no? And last is breach of duty by directors. Directors sold land to themselves at a low price and resold it for profit. It is called as, again, breach of duty by directors. So in these cases, only minority can file a case in NCLT against operation mismanagement. Number one is ultra vires acts. Number two is fraud on minority. Number three is wrongdoers are in control. Number four is improper passing of resolution. Number five is violation of personal rights. Last is breach of duty by directors. Very easy. Okay. Now, meaning of operation. We know this, people. Unfair, harsh or unjust treatment of minority by the majority is called as operation. Okay. Operation means conduct that departs from standards of fair dealing. You are completely unfair. Okay. Now, who can apply to tribunal for remedy or relief? Section 244. Very important, this limit. If company has share capital, at least 100 members or 1/10 of total members. If there are 100 members, 10 members. If there are 1000 members, 100 members. So 100 or 1/10, whichever is less. Members holding at least 10% of the issued share capital can file a case in tribunal under section 244. If the company does not have share capital, at least 1/5 of the total members can file a case in the tribunal under section 244. Very easy, people. Now this is the most important statement. Tribunal can waive the limits if a genuine cause exists. Application can be made jointly with written consent from others. Right? So 10 to 15 people can file an application jointly. Yes or no, people? So tell me quickly, if a company has got share capital, who can file a case? At least 100 members or 1/10 of total members, whichever is less, or members holding 1/10 of the total share capital of the company can apply under section 244. Who can file a case? Members, central government can also file a case. Okay. Now, central government has also power to refer cases of operation mismanagement by themselves. If there is any fraud, misfeasance or persistent negligence, business not conducted with a sound and logic purpose. What is the meaning of prudent, people? Normal practice. If you are conducting business not a normal practice, it is central government may refer your case by suo motu. Suo motu means by themselves only they can apply to tribunal. Next is conduct injurious to trade, industry or business interest. Example is a pharma firm sells substandard medicines damaging trust in the whole industry. In that case, central government can refer to operation mismanagement. And last is business carried out fraudulently against public interest. A chit fund company runs a Ponzi scheme cheating small investors. Central government can refer to NCLT. People, definitely question can be asked, what are the scenarios in which central government can refer cases to NCLT? You have to write these 4 cases along with meaning, along with example. Every single thing has been given to you, people. Okay? Chalo. Next is, what are the powers of tribunal? If tribunal believes company's affairs are oppressive, unfair or prejudicial to members, public or company's interest, or winding up would harm shareholders through though normally justified. Okay. What is the meaning of this? First of all, 2 conditions must be satisfied. Number 1 is company is conducting business in a manner which is wrong to the shareholders, it is unfair, it is prejudicial to the members, public or company's interest. Number 1 is that. So in that case, NCLT can order winding up. Yes or no? Simple solution. The problem is, if the company is being wound up, stakeholders will suffer huge losses. It is going to hurt the stakeholders very badly. So when there is a scenario where you cannot wind up the company, at the same time company is doing fraud, in that case, tribunal will have powers of tribunal. Now let's understand what can tribunal do in these scenarios. Number 1 is they will regulate company's affairs. Tribunal directs that you should do quarterly audit and transparent disclosures. Next is purchase of shares by members of the company. Majority asked to buy the minority shares. Number 2. Number 3. Tribunal will ask them to reduce their share capital. Shares will be bought back or will be cancelled. Restrict share transfer allotment. Stops debtors from issuing shares to their relatives. Next is cancel, modify agreements with MD or directors. Next is modify other contracts. Cancel fraudulent transfers. Remove MD, manager, director. Recover undue gains. Appoint new directors. Impose costs and penalties. And last is any other just and equitable. To stop stories like DHFL, to stop stories like Satyam, to stop stories like Ponzi, chit fund scam, tribunal can give these orders. People, this is the most important topic, I would say. Definitely in your exam, question will be asked from this topic. What are the powers of the tribunal? Okay, people? Chalo. Next is rights to apply to tribunal. We know, people, at least 100 members, will not go in detail. Tribunal may waive. Okay. Same thing is repeated, people. Class action. Very, very important. When a group of members or depositors jointly file a case in NCLT, if the company's affairs are conducted in a unfair or unlawfully, who can file? Company with share capital 100 members or 10% of members, or members holding company with share capital 1/5. Depositors, 100 depositors are prescribed. So people, let's take an example of DHFL. So DHFL was taking loan from the bank, and then they are actually supposed to give these loans to developers and house owners, right? Now they are taking loan, but they're not giving it to them. They are giving it to the shell companies. Indirectly, it is profiting to politicians and the promoters. Yes or no? In that case, all the homeowners together can file a class action suit. Instead of everyone filing case individually, one case will be filed on behalf of everyone, and that is called as class action suit, section 245. If it is share capital 100 members or 1/10, if company does not have share capital 1/5. Right, people? Now, grounds for filing class action. What is the relief sought and what can be demanded? If it is ultra vires, stop the company from acting beyond the MOA AOA. If it is breach of law or articles, restrain them, stop them from violating the articles. Misleading resolution, declare resolution as void if passed by misstatement. Acting against resolution, you have passed one thing and you are doing something other, stops company from acting against members resolution. If there is a fraud or wrongful conduct, seek damages or compensation from company, directors, auditors, experts who all were involved in the fraud, and any other relief. Very easy, people. I have also given you the example so that you will be able to easily read, understand, learn. Okay, perfect. So 6 grounds for class action suit. Number 1 is ultra vires act. Number 2 is breach of law or articles. Number 3 is misleading resolution. Number 4 is acting against resolution. Number 5 is fraud or wrongful conduct. 6 is any other relief. Procedure is, people, public notice issued to all affected members, depositors once case is admitted. Lead applicant, person will select one lead applicant. One case rule, 2 class actions for the same cause is not allowed. Cost of case to be borne by the company and whoever were responsible. Very easy, people. Chalo. Effect and penalties. Tribunal's orders binding on the company members. We all know this. Penalty, jail section does not apply to banking companies. The reason is, if it was so easy to include banking companies, then everyone will lose trust. It will unnecessarily create panic. It will again hurt the economy very badly. That's the reason why banking companies are not included. Very easy. Chalo. Now, people, let's look at the expected questions. The directors of Crystal Electronics Limited continuously ignore minority shareholders' queries, withhold dividends for 3 years, and allot further shares exclusively to majority shareholders. So now the question is, using the meaning and judicial interpretation, operation, people see, I've mentioned every single thing over here. 241, meaning of operation. 242. What is the expected answer in your exam? I've given you the expected question also. Next is, Regal Steels has 1200 shareholders, 80 members holding 12% of issued capital. Allege that the managing director diverts company contracts. Based on section 244, discuss whether their petition is maintainable. Also state the condition under which tribunal may waive the eligibility. Number 1, Regal Steel Limited has 1200 shareholders, 80 members. Allege MD has diverted 12%. So not less than 100 members or members holding at least 1/10 of issued capital. So petition is maintainable because they are holding 12%. Even if they didn't match, tribunal can still waive depending on the condition, how unfairly they were treated. That should be the answer, people. Fraud on minority. Again, same thing, people. Tribunal may make any order to an oppressive. Orders may include XYZ. That's it, people. So we are done with the expected question also. Now let's look at the past year's question paper. No question was asked from December 23 attempt. Okay. Let's look at June 24. Explain the term class action suit under section 245. What are the remedies that can be sought in a petition? Grounds, relief sought, remedy that can be provided by NCLT. I've given you one table. You have to simply write that answer. Very easy, people. That's it, people. So simple. See, next question. A public limited company has got 600 members. So tell me 10% is 60 members. The issued and paid up capital is 5 CR consisting of 5 lakh equity shares of rupees 100 each. 90 members holding 10,000 equity shares filed a petition before the tribunal for the purpose of relief against operation mismanagement. In the light of the above, answer the following. Examine the relevant provisions of the law and decide whether the said petition is maintainable. People I know, tell me, people, quickly. 10% of total members. Yes or no? 1/10 of the total members. So 1/10 is 60. How many people have filed petition? 90. It is maintainable. In case 40 members subsequently withdraw their consent, what will happen to the petition? So if people withdraw the petition, it is not maintainable, but tribunal will check once that for which reasons have you withdrawn. If it is fair, they will allow you to withdraw the petition. If it is unfair, they will not allow you to withdraw your petition. Very easy. In case the total number of members are less than the requirement, is it possible to still file a petition? If so, under what circumstances? Tribunal can waive the requirement also. Yes or no, people? That's it. So we are done with the company law with thoroughly. Yes or no, people? So it has been a wonderful experience to teach all of you guys. Companies that was amazing. Yes or no, people? Just let me know in the comment section how are you liking the lectures, and please make sure to drop your feedback. Okay, people, so that I can teach the next batch in a more better way possible. Whatever requirements you want, people, let me know. I will work on that feedback. Okay. So thank you so much for watching. I will see you in the next one. Take care. Bye bye. Eat well, sleep well, and study well. Okay. Chalo. Thank you so much for watching. I will see you in the next one.